Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 9th, 2025, and we're diving into the latest earnings report from Richardson Electronics. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Richardson Electronics has just released their third quarter results for fiscal year 2025, and there's a lot to unpack, from strategic asset sales to impressive growth in certain segments.
Revenue and profitability overview. Let's start with the top line. Richardson Electronics reported net sales of $53.8 million for Q3, marking a 2.7% increase year over year. John, what are the key drivers behind this growth?
The growth was primarily driven by a significant increase in sales within the Power and Microwave Technologies Group and Canvies. PMT sales rose by 6.6%, largely due to higher demand from semiconductor wafer fab customers, while Canvies saw a 39.5% increase, reflecting improved market conditions in North America.
And how about profitability?
Despite a net loss, the adjusted earnings per share came in at €0.11, beating the forecast of 8 months. The gross margin improved to 31% from 29.5% last year, thanks to a favorable product mix in PMT and GES segments.
Strategic initiatives and asset sale. Richardson Electronics made a strategic move by selling a majority of its healthcare assets. How does this impact their financials and future strategy?
The sale brought in $8.2 million, strengthening their cash position to $36.7 million and leaving them with no debt. This move is part of their strategy to focus on higher growth and margin opportunities, particularly in the green energy solutions segment.
And what about their cash flow?
They've achieved positive operating cash flow for the fourth consecutive quarter, which is a testament to their effective financial management and strategic focus.
Segment performance and market conditions. Let's delve into the performance of Richardson's business segments. How did they fare this quarter?
The PMT segment saw a 6.6% increase in sales, driven by semiconductor demand. Canvies also performed well with a 39.5% increase. However, GES and healthcare segments faced declines, with GES down by 19.4% due to project-based variability and healthcare down by 32.3% following the asset sale.
What does this mean for their market positioning?
While there are challenges, the strong performance in PMT and Canvies positions them well in their respective markets. The strategic focus on high-margin segments should help mitigate the impact of declines in other areas.
Operational efficiencies and future outlook. Operational efficiency is crucial for any company. How did Richardson Electronics manage their expenses this quarter?
Operating expenses were slightly up at $14.5 million, mainly due to higher employee compensation. However, their non-GAAP operating income rose to $2.2 million, indicating effective cost management.
And looking ahead, what can investors expect?
With a solid backlog of $134 million and a declared dividend of 6 cents per share, Richardson Electronics is poised for steady growth. Their focus on high ROI opportunities and maintaining a strong balance sheet bodes well for future performance.
Key takeaways. In summary, Richardson Electronics has shown resilience and strategic foresight in their Q3 2025 results. With a focus on high-margin segments and a strong cash position, they are well-positioned for future growth. John, any final thoughts?
Richardson Electronics is making smart moves by divesting non-core assets and focusing on growth areas. Their financial discipline and strategic initiatives should continue to drive value for shareholders.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Richardson Electronics' performance in the comments below.